Let us go for the advantages of accounting of GST transactions. Till now, we have discussed it is required, it is required, it is this, that. Why it is required? What are the advantages? There may be some disadvantages also. But always we focus on the advantages because it helps the business. The main motive of the business is what? To grow, to run, to expand. So for all this purpose, every after financial year, end of the financial year, it is very, very necessary to have a proper result of the financial transaction. That is ultimately we have to prepare a report on the financial transaction. But there should be certain advantages. Otherwise, why the GST transactions will be kept it in order? So what are the advantages of financial transactions? Let us see one by one what are the advantages. It ensures the legal compliance. Just now, we have discussed about the penalties. If organizations unable to pay the tax on time, the penalty, the extra amount, the extra charge according to the law, they have to pay. Now see, what are the advantages here? Ensures legal compliance. What is the accurate GST accounting helps all the businesses comply with government regulations and avoid penalties. Again, the word penalties comes, right? Avoid penalties related to incorrect or delayed tax file. So what is required in that case? Ensures legal compliance. So the first and foremost advantages of keeping the accounts for GST transactions is to avoid the late payment, avoid the penalties, help the government. That is why, because legal compliance always goes through the court only. So once it is under the legal compliance, so it will be very difficult for a business to continue the business. So that is why it is most and most advisable to keep the record properly, accurate result in the proper time, and as well as paying the tax when it is required. Do not delay. So for all this purpose, accurate transactions calculations gives us the result in accurate time. Once it is given by the GST authority or the CA or the accountant properly, then what will happen? On time, we can pay the GST very easily. So in that case, what happened? There won't be any possibilities of penalty. It helps the organization for the smooth running of the business. That is the prime advantage. Next is what? Facilitates input tax credit, which is known as ITC, most important terms. It facilitates what's input tax credit. So what does it mean? Claims proper recording of input GST allows businesses to claim tax credit, reducing their overall tax liability and improving cash flows. So this proper maintenance of the GST helps an organizations for claim of input tax credit as well as reducing their overall tax liability, because in certain areas the exemptions are also there. So the proper maintenance of the GST helps to know each and every pros and cons of GST so that we can minimize the GST and thereby we pay the GST and there won't be any penalties also, there won't be any cases also. So it improves what? Cash flow of the business. Once there is a good record of a business, then what happened? The business always gets very good cash flows. So where from these cash flows comes? Cash flow is always required to grow the business. So for this cash flows, definitely there are different sources. Equity is all one source for cash flow. Debt is one source for cash flow. So what is equity? The shares which we get from the public. What is debt? The borrowing money which we get from the financial institutions. So a company and industry always gets money from the outsiders. One may be from the shareholders, another may be from the borrowers. So for that purpose, always we have to show an account in such a way that it's a transparent picture. So for that purpose, definitely maintaining accounts with the perfect GST transactions and record is mandatory. And it helps the perfect transactions along with the accounting helps what? In showing the proper financial statements for the growth of the business, for the cash flow of the business, to avoid the liability, to minimize the liability. So all these cases are related with the accounting, accounting of GST transactions. So now hope you are clear about what is GST transactions as well as what is accounting, how it helps. So ultimately what we can say that we have to prepare a financial transactions in such a way through the GST transaction so that it helps for the cash flow of the business, growth of the business, expansion of the business through the transfer and records maintained by the accountant. So there are more and more advantages of this accounting of GST transaction. Two already we have discussed. Let us see the rest of the advantages, what type of another advantages we may get. So the third advantage is what? Improves financial transparency. So how it improves? GST transactions creates a clear audit trail, making financial records more transparent and easier to review by auditors and tax authorities. That is transparency. Remember. Let us go for the next point. I will explain you. Let us see what is the next point. Simplifies tax filing and reporting. Organized GST accounting simplifies the process of preparing and filing monthly, quarterly, and annual GST returns, saving time and effort. Next, this is not the last, but the few more advantages are there. But let us discuss these five main advantages. Enhances business credibility. Enhances business credibility. Businesses with clean and compliant GST accounting practices are viewed as more reliable by partners, investors, and financial institutions. This part comes under what? Cash flow. We have discussed about cash flow. It helps in cash flow. So how? That is another advantage. So let us go for the first point, what is written here. What is written here? The first point, improves financial transparency. Once the transparency is there in the business, it always helps the business to improve their financial stability, improve their financial status. Because when it is transparent, everybody is interested to invest their money there. Without transparency, you will not get any shareholders, will not get any public, will not get any borrowers. So the transparent picture only is a plus point, is an advantage to get the more and more advantage for the financial matters. So that's why the transparency, the accounting always prepared by the GST transactions, the transparency is there and it helps in what? Clear audit. Auditing is what? Auditing is checking the transactions with the documentation. So in case of the auditing, whatever the recorded transactions, that shall have to verify. In auditing, always the verification takes place whether it is correct or not. Once it is recorded, once the transactions is recorded, analyzed, then ultimate results came out. After that, the audit takes place. And auditing is a verification process. So in case of the verification process, whatever the transactions took place already, that shall have to be verified by an authorized person. That is mostly the CAs. The authorized person, what they do, they verify the transactions whether it is correct or wrong. That is an auditing. So in case of the auditing in an organization, which is must, without auditing, you cannot close your files. After the end of the financial period, the accounting file has to be closed after the signature of the audit. That means the auditor has to verify the entire transactions, entire accounts prepared by an accountant, prepared by an organization. So that's why what happened in case of the auditing, if there is a transparency, the auditor is easily check the entire transactions as well as the report is very easy to give it to the organization, which always have a very good impact for the entity. In that case, it is easy for them to expand, to get loan, and ultimately to go nearer to the public. And their business will grow in that case. So the transparency is there. If the transparency, it improves the financial transparency. The accounts always improves the financial transparency because it includes all the data, required data. Next, it simplifies the tax filing and reporting. So that accounts which is maintained by the GST transaction helps in filing the return, tax filing and reporting. So tax filing is nothing but the calculation of the accounts throughout the year what took place. So that means whatever the transactions are there during a particular period of time, all those transactions we have to keep it in one place and analyze all those transactions, and then whatever the amount comes there, after adding and deducting, after receiving all the received and payments amount, so whatever the ultimate income it shows, for that income we have to pay a certain amount of money as a tax. That is the calculation of the tax. So that filing, that means that calculation through the accounting is very much helpful. That is the advantage. This transaction, GST transactions, accounting of GST transactions helps in filing the tax. And ultimately, not only filing the tax, after filing the tax, you have to report it. That reporting part is also very necessary. Reporting means ultimate result. You have to write it down. Their transparency, their accuracy, all this will come to the reporting portion. So in reporting, it will be very easy when there is a transparent accounts for the GST transactions. So this is all about the simplifies tax filing. Very easily they can prepare. That is why it is known as the simplifies tax filing. Next is what? Enhances business credibility. Credibility. Very, very important point here, because business with clean and compliant GST accounting practices are viewed as more reliable by partner, by investors, by financial institutions. These three things are related with cash flow. So how the cash flows? The partners has to pay the amount of money. Investors has to invest the money in the business. Financial institutions has to pay or give the money to the business in the form of loan, long term, short term. To exist, to run, to grow, to expand, we need money. Any business houses need money for their continuous process. Business is not a process of 1 day or 2 days. Once we get one profit, we cannot stop that one. That is not called business. So business is what? It is a continuous process. That is why it is known as the business entity. The concept is there. The first concept of the business is what? Business entity concept. So why it is known as? As because business is a continuous process. We have to keep on doing. Today we are getting a huge amount of money. We cannot stop the business there. After getting that amount of money, again we have to invest. Again we have to purchase some commodities. Again we have to purchase more and more goods. Then only the more and more customers will come, it will be attractive. And we can expand as many as possible. So for that purpose, for that good faith, for that goodwill, for that trust, we need an accurate and clean picture of the accounts. So accounts is the base for growth of a business, expansion of a business, running of a business. So accounts with the GST transactions helps in what? It helps in growth in the form of investment. And investment will be made by whom? Partners, investors, as well as the financial institutions. So these are the prime organizations. These are the prime sources through which a business can grow. And that is why the proper, transparent, clear accounts for the GST transaction is required. This is one of the advantages of the accounting for GST transactions. Fine. Next, let us go for purchases from composition dealer. Now see, as I discussed with you, the key factors of GST relates with always two factors. What are those? One is input, second one is output. So input is what? Purchasing the goods. So when we purchase the goods, we have to pay a certain amount of money, which includes the GST. Now, purchases from composition dealer. There are different type of dealers for purchasing the goods. Some dealers may maintain GST, some may not maintain the GST. Here you see purchases from composition dealer. Immediately key features of the composition dealer. After that, accounting treatment of the purchase of what is composition dealer. Then another is there which is known as purchase from unregistered dealer. So what we come to know, that means two type of dealers are there. One is composition dealer, another is unregistered dealer. So first of all, we have to know what is composition dealer and what is unregistered dealer. So purchase may take place for both these cases. Let us go for first composition dealer. What is composition dealer? Let us see here, purchase from composition dealer. But remember two things. One is unregistered, another is composition. Under the GST regime, a composition dealer is a small taxpayer. Key points, small taxpayer who opts for the composition scheme to simplify tax compliance. These dealers pay tax at a fixed rate on turnover and are not allowed to collect GST on sales invoices or claim input tax credit, ITC. That means in case of the composition dealer, it's a very small taxpayer who opts for the composition scheme to simplify the tax, very simplify the tax. That is, these dealers pay tax at a fixed rate on the turnover. Whatever the turnover, that means whatever the sales took place. So on that turnover, on the total amount of money, simply they pay a tax. There is no complications over here. So simply they pay a tax, the fixed rate of tax will be there. So that fixed rate of tax they have to pay on the total turnover. Suppose there is a turnover of 10 lakhs rupees per annum and the tax is 12%. So this simply they have to calculate the tax on that 10 lakhs rupees and it will come around 12,000 rupees and they have to pay that amount of money, 10%. Sorry, for 10 lakhs rupees, it is not 12,000, it will be around 1,20,000 rupees tax they are supposed to pay. That is a fixed rate on the turnover. Turnover means sales and are not allowed to collect GST on sales invoices. So they are not allowed to collect GST on sales invoice. So whatever the documents for the sales, they are not allowed to take any GST. That means they cannot take GST from the public. They have to pay the GST after the end of the financial period, after getting their total sales amount. This is all about the composition dealer. They're not supposed to collect the tax from any of the customers. They are supposed to pay the tax on the total sales they made during a particular period of time. This is all about the composition dealer. They don't have right to collect the GST from the customer. So here the key features of the composition dealer is what? Cannot charge GST on invoice. As I mentioned over there, that the documents which they prepared for the sale of goods, they cannot charge GST. Secondly, cannot issue a tax invoice. If they cannot include the tax, definitely they cannot issue a invoice. Cannot collect GST from the buyers. That means from the customers. In a very simple word, from the customers, they cannot collect any of the GST. They are not eligible for input tax credit. And they are not included in input tax credit also. So these are the key features of the composition dealer. So they are very small taxpayers, number 1 point. Secondly, they cannot include GST in the tax invoice. Thirdly, they have to pay GST at the end of the financial year on the total sale made by them. Total turnover during a particular period of time. And one more thing, the fixed rate of interest. That rate of interest is also very, very necessary. So it is always given that how much rate of interest they are supposed to pay. These are the composition dealers. So accounting treatment of purchase from composition dealer. We have studied about the accounting treatment. So in this case also we have to study about what? Composition dealer accounting. So here you see, no, what are the treatment? What are the key factors included here? First of all, no GST component in invoice. First accounting treatment. When we prepare the accounting, no GST should be involved there. So that's why purchases from a composition dealer do not include GST. Hence, no input tax credit can be claimed by the buyer. So buyer cannot claim anything. So that is why it says that no input tax credit. Input tax credit is not there. Secondly, recording the purchases. The purchases is recorded at the total invoice value as shown on the bill of the supply. Total value the purchases has been calculated without the GST. No GST is recorded over here. Effect on input tax credits. What is the effect of this input tax credit? Since no GST is charged by the composition dealer, the buyer cannot claim ITC. Input tax credit, buyer cannot claim. Even if the goods and services are used for business purpose also, they cannot claim any ITC. As because there is no GST only. They're not recorded any GST. So definitely the buyer cannot claim. So this is all about treatment of accounting. That means at the time of preparing the accounting, no GST is considered, only the value is considered, and that is why the buyer cannot claim any ITCs, and they have to pay the tax on the total amount of the money, that is the turnover, during a particular period of time. This is all about the composition dealer, accounting for composition dealer. Let us see the conclusion that purchasing from a composite dealer requires special attention in GST accounting, especially since no GST is charged on credited. So business must ensure that these transactions are correctly recorded and excluded from ITC claims and maintain GST compliance. So these are the things we have to keep it in mind. First of all, the accounts should be properly maintained, because on that account only the entire calculations will take place, and ITC cannot be claimed by the buyer. So this is all about the composition dealer.